Hi, everybody. Chris Lawhead here with Matt Amundson. We are the investor relations team at Property Llama Capital. And if you're like us, some of you are in need of depreciation shares. Some of you cannot find good deals to 1031 into. And so we are playing the depreciation game ourselves with our own personal investments. And we thought we'd share a little with you about how we're doing it and how it could be a quasi or maybe a substitute or at least a parallel to a 1031 exchange. So Matt, you just entered into a bunch of funds with high depreciation shares. Can you share with us what you did, how it's working, and what it all looks like?
Yeah, let me do that. I was trying to make some moves with my equity because I had a bunch of stale equity. And like you said, the 1031 exchange didn't really make any sense, but moving into funds with high depreciation shares did. So we're just going to kind of run through what that looks like for you, okay? So when you sell an asset, you're going to owe capital gains, and we all know that. But you can delay those capital gains by taking advantage of accelerated depreciation. So that's where a person will purchase an asset, and you can do this with your own assets, or they do these in these funds, and then they run a cost segregation study on that. And that cost segregation study segregates out different parts of the project, the building, the structure, and accelerates the depreciation in different categories so that you can take most of that depreciation in year one. Okay. And then
sorry to interrupt, Matt. That's what we call a cost seg. So when you hear people talking about the cost segregation study or the cost seg, that's exactly what they're talking about.
Yeah, cost seg is the shorthand version of that. Okay. And then like my strategy with that is, okay, defer some of those taxes, reinvest those, deferred taxes, and then try to grow those before I have to pay them back to Uncle Sam. So what I did this year is I sold 2 properties, and I was going to owe 160 in capital gains. I invested about 250,000 into funds with those high levels of accelerated depreciation, and with that, I was able to defer $80,000 in taxes. Okay, so my strategy is then reinvest that 80 grand and double it in 5 years before I pay it back to the government. Okay, that's interest free, by the way. That $80,000 I owe now in 5 years. When I pay it back, it'll still be $80,000. Okay. And then, of course, when that fund matures, I'll see what kind of tax avoidance I can do at that time if depreciation is still a good angle. And that's kind of the strategy, is deferring those taxes. Okay, so how we got here is I uploaded my portfolio into propertyllama.com. Okay, then I analyzed my portfolio, and this is what you can do with Chris and I. We'll do a free portfolio analysis session with you. Okay, review your options. We come up with some plans, and then you talk with your CPA. You want to get real granular with your CPA on these moves because you got a lot of moving parts, and you want to make sure that what you're doing is the best fit for you and your situation. Okay, and then we're trying to accelerate that path to financial freedom. So that's what we're here to do.
Yeah, and just to repeat a little what Matt said, we're not your CPA, we're not your tax attorney, we're not your financial advisors. You have to confirm all this stuff with your team, right? We're just we're just modeling these things in the software. What's important, I think, to understand, especially about our funds like Verico 3, is that there will be no depreciation realized in 2023. So if you're like me, you're looking to buy some depreciation shares that will offset some of your cap gains for 2023. Verico 3 is not that, right? The cost seg study and the depreciation will be realized for those B-class share investors in 2024. So that's important. And yeah, like we said, this is kind of a cat and mouse game, right? And you do need everybody on board, specifically your CPA and your tax attorney, right? But we think it's a parallel or a useful quasi 1031 because there's no good deals to 1031 into. And you're not avoiding these taxes, you're just kicking them down the road. And what Matt said, I think, is perfectly accurate. It's an interest-free loan from the government, right? He saved $80,000 in his tax burden. He's going to go take that 80 grand, stick it in another fund, hopefully double it. Obviously, there's no guarantees and investing is risky, but hopefully double it in the next 5 years. And then he's got to pay that 80 grand back. Well, he just took that 80 grand and turned it into another 80 grand, right? Interest-free. So anyway, if you have any specific questions, if you want to hop on a call with us and your CPA, or if you want to do a portfolio analysis, just reach out. We'd be happy to do so. All right, everybody. Thanks, Matt.
Thank you.
Take care. Bye-bye.